Mr. Agrawal, good morning. Thank you for joining us. What does one do? Is it time to take a realistic look and say, look, this is a crisis, and in a crisis, strange things could happen. In 2008, when crisis had happened, markets had collapsed more than 50%. Right now, we are down another 30. So if right now we are dealing with a man-made crisis, which is health, and which is oil, and a medical crisis, which is the virus, things could go even worse than 2008.
Good morning, Nikul, and viewers. See, one of the problem is that we are not, this is not coronavirus problem. This is the problem of fear of coronavirus. So underlying coronavirus is there, of course, and the solution for coronavirus is shutdown of the economy, which has never happened, whether it is a SARS or whether it is a 9/11, whether it is a Y2K collapse, Harshad Mehta collapse. You never close down the economy. This for the first time it is happening, and I don't think there will be anybody on this earth who has seen this kind of situation when the global economy is literally coming to an halt. And how do you model it? And everybody knows it's for a month or two, and yet nobody knows how to model this kind of change in the marketing scenario. So ultimately the underlying values of the companies will prevail, and all the excesses which were there in the markets in terms of whether it is a growth company and excessive valuation was there, or fraudulent company which was kind of running the show. I think all of those extra gas which was there in the market, I think it will definitely has evaporated and is evaporating. But these are completely uncharted and first time ever in the history, at least for me, it is first time in the history.
So what is right and what is wrong in this market? What is value and what is still expensive? How does one figure out that, look, this is the fundamental bottom for this market? Technical bottom, Mr. Agrawal, nobody knows. But what is the fundamental bottom given that economy will slow down, earnings will be contracting, and NPA cycle will rise again?
So, it all depends on your understanding of the company. The valuation check or value check remains still same, because post coronavirus we are not thinking that it's a different world, different theories will come, different way of understanding will come. Again, the present value of future cash flows are the is the foundation of value. So that doesn't change, and I also don't think that fundamentally economics or the company's long-term future is impacted. Probably even 2022 onwards, EPS is also not impacted, and hence I think whatever was the assessed value, say a month back and today, would not be significantly different from most of the companies. Some companies which are weak and somehow they are not able to sustain this particular avalanche or this particular stress. Of course, they will go under or their valuation will change. But broadly, all the blue chips, all the strong companies, their earnings power is not going to change, and hence I don't think the underlying value changes. What is changing is the price, and right now the crisis is that of not a value change. It is a crisis of price change, and in the short term, these price changes can be quite crazy. These markets are all wired up, and world over prices are collapsing. You look at the Dow future and decide what should be the level of the markets here. So it's a very different world and very different way of looking at value or price in the short term. I don't think values have changed so much, and it is going to change so much in the months to come.
Now, Mr. Agrawal, before the crisis happened, we were staring at a very polarized market. 15-20 stocks were going higher, rest of the market was not going anywhere. The valuation difference between a Bajaj Finance and a Edelweiss had become extremely high, and that's largely because of growth and liquidity. So what happens now? Do you think some of these polarized stocks which were going up because of global flows and local flows now will start coming down, and that's where the crushing fall will be even more?
See, right now this is I think 18th day. Foreigners have been selling almost $500 million every day. So that pressure is continuously there, and I mean all the foreigners, all the institutions they own, all the bluest of blue chips, all the growth companies are owned by them, and hence selling is going to come in the growth companies only. And growth companies, see, as you said in your beginning, when the selling comes and there is not enough buyer, the floor falls through. I mean there is no buyer at 3,000 rupees, there is no buyer at 2,500 rupees. So what do you do? How do you create a buyer? So the biggest challenge is it is not it is scaring away the buyers. I mean, it's not that there is no purchasing power in the system. There is a purchasing power in the system, but today the fear of moving out or coming out and buying is becoming very difficult, because anybody who did bottom fishing at 9,000 Nifty, they are kind of they are scared at 8,500, and now index is even lower. So, so the fear is becoming total, and hence anybody wants to sell. And another problem globally is the ETF. Now, in ETF, global ETFs, or whether it is emerging market or MSCI index, when the buyer wants to sell, say, $10 billion or $20 billion, there is no option of anybody but to press the button. And we have seen in our dealing rooms that the sellers have orders to finish off somehow or other during the day, irrespective of the price. So they are not looking at the price at which they are selling. They also bought without looking at the price. The world has changed in a way. In America, incremental, all the subscriptions are to the passive, and now I think all the sales must also be coming from passive. Now, when the passive sells, when the passive buys, they don't look at the price. When the passive sells, they don't look at the price. Hence, if you see the chart formation, I mean, all the technical guys, they say they have never seen a drop without correction, because my sense is the ETF guys are selling without looking at the price. And so, I mean, it is uncharted, and we have to face it. We'll take all the knock on yourself. And my sense is, if you press the spring so much, I think it will also come back at double the speed. But when that comeback will happen, nobody knows.
Okay. Mr. Agrawal, there are some sectors where there is going to be a very strong disruption, like oil, OMCs, hospitality, aviation, where because of virus, it's going to, businesses will shut down, businesses will have to rethink their agility, businesses will have to rework their basic maths. So what happens to some of these sectors now? And what will happen because of these sectors to the banks which have given exposure to them? Do you think that is a bigger concern now?
Yeah, see, this disruption of 3 4 months, I think authorities have to come forward and say, I mean, whatever. See, because this is first time in the history. So how do you run the economy, and how do you run the companies, or how do you run the banks? So they have to come out with they have to listen to the problems, and say somebody is not able to, say somebody is working in shopping mall, and shopping mall itself is shut, and his salary or his income is impacted. The small shop owner or an employee, and his EMI or her EMI is impacted. So I think there has to be some kind of relief for 2 3 months by the authorities for these guys, and I'm quite sure it is coming. I mean, I think authorities must be listening to all of that. They are not able to announce till they get on top of the problem, but I'm quite sure the government authorities, I mean, world over, I think France, they have suspended a lot of tax payments, utility payments, and all of that. That exactly, those kind of reliefs, depending on what exactly is our problem, has to come. Authorities must come and talk to the markets, and talk to you, and assure that the way they have stood by in the Yes Bank crisis, same way they should stand by everything is a crisis, in the sense that if EMI not coming or shops getting closed for 2 3 months, I think it is only the government only can bear this particular stress, because government has unlimited printing power, government has liquidity of the last resort. I mean, ultimate liquidity of last resort. Even I hear that IMF is thinking of releasing $1 trillion stimulus to the all the needy countries, and also I think a lot of these things are going to happen. But right now, if nothing has been announced, you cannot build onto any of these, and out of fear, people who cannot take the stress of seeing the lower quoted prices. If my portfolio is worth 100 crores and today it is 70, and day after it is becoming 75, there is a limit at which everybody gives up.